TGIF, everyone. Pretty wild week, pretty whippy moves, especially on Fed Day. How's everyone doing? Hello, Brock, Royal, Hugo, Alexander, Amit. Welcome to Face. You can ask questions. That's what we're here for. Okay, so this action after the Fed morning Didier, looks like a false breakdown here. But I drew this line yesterday off the high of the move and tagged it here. And, I didn't know whether or not the line would be respected. So far, it did turn the euro back. Anyone know what kind of formation this is? Even though, may not work, it is a formation. Come on, this is your pop quiz. No, 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 no. Someone knows. Can you answer it in chat? Ears and nose? What? No. Ears and nose? No. Adam and Eve, Jane? Yes. The Euro's in the garden and took a bite out of the apple. No, I'll give you a hint. It's a descending triangle. Okay. Anyone know what this is now? So here's the descending part. And you have flat bottoms on descending triangles. The inverse of that would be an ascending triangle. So whether or not it works, right, okay, probably more upside. And I would say getting back over this line, 1870 is it. And, I kind of agree with you because I saw this the other day that we kind of failed up here in the Dixie. When we were up here, I thought we'd have a chance for a breakdown. But if the euro turns out to be a descending triangle, what kind of triangle could this be? You have a flat top and let me move the chat. Anyway. An isosceles, I don't even remember what that was. But basically what you get is some type of uptrend here, flat top, ascending. Maybe it does put in a right shoulder. Anyway, I don't think you have to wait for 94 for it to turn good back over this high. What would have made it a little bit more bearish in the dollar? See, this high was 93.59. I'm surprised they didn't elect the stops over the high of the move, which was 64. So, I guess if you go with the trend, you'd be looking for lower, but I still have to respect, and I think it may because I'm looking for 32 in cable, so Gregos count. So we'll see. Look, it also on the daily, just like the euro, 93.53. Okay, so there are two important lows, and then I'm going to pass it. Look at the euro daily. Look at how we held the 50. Right? So underneath this low, or the descending triangle, as Blake says, there could be like a trap door. There's some air under it. So we held that on the 50, and look at gold yesterday. held the 50. So, and I think this was, near the low of the week. So we have, at least you have a couple of things going into next week, that will tell you, that there could be a nice change in direction. And it's the lows of the week in the euro. Just watch his 50-day moving average on your daily and wait for it to take it out and go with it. Because, it's held it for quite a long time. And sometimes what happens is once you take out the 50, you could make a move all the way to the 200. So, that would imply this. I know most people are just looking for this, and that's possible. This is where the acceleration took place. Well, the S&Ps failed from the 2-week off number. Talked about it in here, 34.20. So if you played off numbers and you just shorted it at the off number, you only had a 9-handle drawdown. Only a 9-handle drawdown. And yeah, I'll wrap it with silver. This was probably one of my better calls this week on Turnaround Tuesday. It was up here. Right? And then we had the breakdown, and now we're right back here. So the recovery in silver, I think, was more impressive than the recovery in gold. I mean, so far this recovery doesn't look so great. Maybe this is a flagpole and we're building a flag. But watch this week's lows, because if that gives way, I think here's your other descending triangle, right? I could adjust this and just bring it up here now. And it'll look like a descending triangle. I don't know why I'm having so much trouble with this. Anyway, you get the idea. I could always adjust the line. So a lot of, that happens sometimes where a formation, you'll see one, and then they start popping up everywhere. So I'm seeing a lot of descending triangles and a couple of ascending. The magnet is active. Okay, thanks, Georgie. So I have to get rid of this right here. Great tip. Yeah, there you go. All right. So see what a community we are? That magnet. Okay. All cross against US dollar. Looks over it, but probably makes indeciphered jumping and dovish Fed. Probably thinks stay at least. Fed also looks not. Everything will be sideways for the next month and a half. Well, it's been sideways for a long time, so we'll see. Even gold's been sideways since the all-time high. So you might be right. Hey, how are you?
Hey, okay.
Who is that?
Hello.
Hello.
Can you hear me all right? Or is
It's Blake,
you sound
but
like
he sounds like he's at the bottom of a barrel.
Yeah, or in the ocean.
Dang it. Hold on.
Who bought you that new mic? I think your wife did, right? Here comes the FX monster. Don't be afraid. Don't listen to what our president used to say on The Apprentice. Be afraid. Be afraid. Be very afraid. Everyone remember that in The Apprentice?
That was from a movie, wasn't it? Before that.
I don't know, but that's what he used to say, because be afraid of getting fired.
Blake, you're still on the wrong microphone, mate.
Dude, I don't know. My mic. I don't know.
Well, why don't you take over, Steve, for a while till he straightens out the audio? Or I could keep talking.
Well, I'm gonna try something. Hold on, and then I might screw it up even worse. Hey, the good
Well,
news is
go
we
ahead.
have Paul here today. Hold on.
Yeah,
Okay.
there.
Well,
There's
it's
Steve.
at least it's Friday, so not everything is bad. I can mention a couple of things while Blake
Go ahead, Phil.
straight out. Yeah. Actually, first of all, something that I didn't mention yesterday, because Gregor was here, and obviously I love listening to him rather than talking. We had we've been talking about the pound for a while now, and the pound had been strengthening. Remember, I was short euro pound. I closed it. It went a little bit further below, and then it spiked up again. Basically, what we had the Bank of England yesterday. I don't know if Blake talked about it, but the main thing to take home from it, and I think the thing that spooked markets a little bit, is that they did discuss and explore the possibility of negative rates with regulators. Now, it's something they're saying they're not going to do. But you know what they say, never believe something until it's officially denied. So
I like that.
you can bet that they are exploring it, even though there has been no single example of negative rates actually working. But that doesn't stop central banks.
That more or less guarantees that they're going to do it, Stelio.
Yes, and so
because central banks have like they have a specialty in perpetuating failed policies.
we laugh, but look at what they're doing. Anyway, this is why the pound has been spooked a little bit. It's trading a little bit better today because we got retail sales better than expected, and the jump up. Actually, not the jump up, sorry, but it is better than expected. So overall, numbers are coming in better than expected. That's a global phenomenon. You will argue that numbers are not important anymore, but when things cumulatively start pointing towards a certain direction, then it has to be positive. Having said that, I've been reading again today. First week of September, 6,000 COVID cases per day on average in the UK, which is higher than since May or something like that. It's
near the peak, isn't it? From almost back to peak levels of the pandemic.
Yeah. And it's still not winter. So unfortunately, I hope I'm wrong, but unfortunately, it looks like this thing is not going away. Obviously, we know how to handle it a little bit better, but still, it's going to affect businesses, and it's going to affect employment. And the governments cannot just keep handing out checks forever. So, there will be permanent effects, unfortunately, of this thing. And this is something that the markets, or at least the equity markets, refuse to acknowledge. So, all in all...
Yeah, because, Stelio, the equities market seem to be focused on the response to COVID. So we're currently in a mode that's like, okay, COVID is going to get worse. No problem. More money printing, more asset price inflation coming through the markets. And they seem to completely refuse to price in any of the negative side effects of having to run completely unprecedented deficits and exploding the debt higher. They seem to think that that's a problem that's, somebody else's problem, that, nobody should care in the short to medium term about it. So they're pricing in all the, positive effects of unprecedented inflation by the traditional definition of inflation, and just ignore everything else. That's why so far we have this response. I think this creates the environment for a very violent repricing of all that at some point in the medium term.
When there's a vaccine, both Peter Boockvar and Peter Goldstein made that comment that, the market will probably peak on a vaccine.
Yes, because then
go ahead.
Then they will stop being able to hope in unprecedented support, because eventually it will have to to be phased out. I mean, I don't think they will ever stop doing QE, because there is no more any alternative, in the sense that there is not even willingness for foreign investors to buy all the bonds that are being issued. But other than QE just to absorb the deficits, the rest of the stimulus will have to eventually be phased out. And then the economy will actually have to go through a normal or more than, normal is probably not the right word, recession, which the market refuses to price in at the moment. So I agree. It might be one more incident of buy the rumor, sell the news. So, everybody's buying the vaccine rumor, and hopefully, we really hope that it happens, right? But you're very right. Once the vaccine is there and delivered, I think the market might cheer up for a few more days, and then everybody will start focusing what happens, after that.
Yep, that is true.
And if you believe in technical analysis, guys, and it's the last comment, you could pull up Moderna, which is really one of the majors out there going for the vaccine. Steve, here's the symbol. It's
mRNA.
Yeah, pull that up on a daily and a weekly.
Okay, here it is.
All right. So
from a $20 stock to a $100 stock almost at the highs.
And what do you see there?
Here?
Yeah.
So far, the pullback seems corrective.
Yeah, okay. And what else is there?
It seems very orderly.
I see two drives. So I'm looking for maybe Moderna peaks with an announcement that their vaccine works at new highs. I think it will go to 100.
Blake, I think I heard you like a whisper.
Can you hear me?
Yes, but your volume is very, very low.
Okay. Can you hear me?
Yes, but still your volume is very, very low.
Yeah, I'm trying to fix my settings, guys. So just give me a second, please.
I bet he's playing with us. He's on a different room from the mic.
and yeah,
he's still in
pretending
bed.
that there is a microphone problem. Yeah.
Test.
Yeah, there you go. Now we can hear you. Blake, go again. Now we can't hear you anymore.
Can you guys hear me now?
Yes, we can.
Man, it's very annoying. Anyway, hey, I know Paulie's here. Can I just go over a couple of things before I turn it over to Paulie?
Grab it.
Sorry, guys. I'm dealing with. I unplugged my microphone on accident, and then when I replugged it in, it reset all my settings, and it's been extremely annoying. So, I've not been here for anything that you guys have said or talked about because I was dealing with this. So
we were just bad-mouthing you. So good thing.
Can you catch me up, please? Just kidding.
Nothing. We started having a conversation. Stelios, we started giving a few data. Then we talked about COVID and the possibility that actually once there is a vaccine, the markets might peak because then they will start looking forward and thinking that all the unprecedented monetary support will have to be tapered off. So counterintuitively, the resolution of the problem might actually lead to the markets recoupling with reality. So that's the type of conversation we had.
Oh, okay. Well, let me just cover just a couple quick things before we have Canadian retail sales in about 10 minutes. So you guys don't go anywhere. Because I right at the bottom of the hour, and I know Paulie's listening in. I'm gonna turn it over to Paul Franco because Paulie does the European crossover, which is specifically for our customers. And I know Dale and I we talk about it, but a lot of traders don't get to hear Paulie, who is SPZ Trader. If you guys don't know who he is on Twitter, he is. Where is he? There he is. I'm trying to find his handle here. Hold on. Where is he?
The sexy Texan with the Porsche.
Yeah. And anyway, I'll pull him up here in a minute. But but I want to give him an opportunity to talk to you guys because you guys don't get to hear him every day, especially those of you that are not Forex Analytics subscribers. But I want to cover just a few things really quick. First of all, the US dollar CNH. If you guys aren't watching this currency pair, it's been in focus a lot through the bank. A lot of the banks and analysts have been watching it. This was our chart of the day, actually, I want to say on Tuesday, and it really started to garner a lot of support the day after I made it the chart of the day. That was probably more of, it wasn't because of me or anything like that. I'm not implying that. It was actually because it was, breaking down. And I was a little worried because we were divergent on relative strength. We're not now, but what we have done is we've hit the 127% extension, and intraday we've made a higher low. So now it looks like we're going to recover. Now, a recovery in the US dollar CNH is also a good indication that we might have a sell-off in risk. Now, if you look at the NASDAQ, this is a chart that actually Citi was just making a big fuss about, but I do want to point out that we haven't been below the 50 DMA, which is the blue line here. We haven't been below this 50 DMA since really, aside from probing, we haven't really got a close down here since back here in April. And when we closed below it, in February, that's when we really took a spill. So everybody's really focused on this, the lows. And you can see like we have this triple bottom this week, which I think is at risk of breaking. Why do I think it's at risk of breaking? Because if you guys aren't watching the yen is, and obviously if you're Forex Analytics subscribers, let me just highlight a couple of things here. The euro yen, the dollar yen, both of them are in patterns in play, and the New Zealand yen. So just, you can see it's obviously in focus if you're a Forex Analytics subscriber. If you're not, I don't think you're late necessarily, because I actually still think that the dollar yen could, make a move to 103, especially if we break through this support here. Now, I want to talk a little bit about the euro yen from last night. If you guys did not, let me take this back. If you did short the euro yen last night because you are a Forex Analytics subscriber, and I, put out this analysis right here that when we right here, the close of the day at the 120, the 1240 level could allow for a bounce back to the 124.50. I meant to say 124 level. Bounce to the 124.50 level, which may offer a level for fresh shorts with risk reward tight, because we're back at the neckline, right? And we bounced back to that last night, and I put in a pattern in play. If you guys did short the euro yen last night, this is probably a good time to at least move your stops to break even, or even take some profits, just in case the dollar yen does hold, because we could actually create a double bottom here in the dollar yen. We have a divergent relative strength, but with divergent relative strength, if the dollar yen decides to break down, which it could, then all that's going to happen here is you're just going to see I'm trying to draw. All you're going to see here is a move in relative strength that's just going to move through this support. So it's either or. And I know I don't like to be wish-washy, like, oh, it may bounce, or damn it, I'm just trying to delete that.
Could be both.
It could be both, but I hate to
Got a pop and then a failure.
I hate to do the wish-washy, oh, it could bounce or it could sell off here. But we are at a critical area, right, Dale?
Yeah,
I mean, yes, we could push below and then do a false breakdown. Obviously, there's a lot of different, scenarios here.
Yeah.
But what I'm trying to point out is it could bounce and create, because of the divergent relative strength, it could create a double bottom. That's why if you're short the euro yen, or even if you're short the dollar yen, we've already been adjusting the invalidation or the stop levels on the dollar yen. But if you happen to be short the yen pairs or long yen, you have to be a little careful. The flip side,
that was a great trade, Blake, and no heat. You didn't have to take any heat. It was
No,
like
it was
immediate
thank you.
gratification.
It was just it was pretty clean out of the triangle,
Yeah.
especially with the dollar yen. But the flip side is if you are short and it does break through, you might want to be looking to take profits quickly too, because the relative strength is oversold. I think we could, especially on a Friday, if we decide to take out these stops, it could be, as you pointed out, Dale, it could be a quick trip. It could be, 103.80. That's not what I'm trying to do here. Hold on. Stay in drawing mode. That's why I need to click. So it may break through support and bounce back, because it's Friday. That's, can happen on Fridays. One last thing, because we have Canadian retail sales, and then I'm going to pass it over to, as soon as the data comes out, I'm going to pass it over to Paul. So we have this big inverted head and shoulder pattern. It's big. Obviously, as long as we stay above, 131, there's no reason to be bearish. I don't want to be uber bullish either while we're below 132.50 and specifically below 133, which is the spike low from here back in June. But we do have retail sales today, right? So again, if you're a Forex Analytics subscriber, you go over here where it says calendar. There's this little button here. It says data flash. The data flash is your live data that's coming out next, and you can see TBA is to be announced. We have some U.S. data, Canadian retail sales. Market's looking for a 1% increase month over month. Month over month retail sales core 0.5%. Previous, was a lot better. So obviously they're expecting the consumer to cool down a little bit. And then we got some Canadian wholesale trade data coming out. But the point I want to try to make here with the Canadian, I'll come back to this here in just a second, is that the Canadian dollar has just had a really heck of a bounce, and we've been watching Canadian data. Well, obviously I've been watching Canadian data for 20 some odd years, but the data releases for Canada, they tend to move before the data is released. And I know a lot of you guys live up north of us. I'm not saying you guys are all crooked or anything, because I really do love Canada, but man, I don't know how your data leaks, they get out early. And that's pretty common. I've seen it so many times over the years. So when you see a move like this, it's one of two things: either position squaring, which it could very well be, because as I told you guys earlier this week, Citibank, their positioning said that the market to their clients, the market's extremely long Canadian, New Zealand, and Kiwi dollars. So you might get a little position squaring ahead of this data, but also what's spurring that? Do people know that the data is going to be weak? And that's why we're seeing some Canadian movement. So anyway, we'll watch the data as it comes out. It's going to come out in just about about 2 minutes. So Dale, Steve, Stelios, and actually Paulie's here too. Hey, Paulie, are you mic'd up?
Paulie?
Yeah, I'm here. Can you hear me?
Yeah.
Yeah. Hey, Paulie, how's it going?
Going well.
Good. So, hey, we're gonna let this data get released, and then we're gonna turn it on to you, man.
Okay, great.
So, Steve, Stelios, what are you guys feeling as far as as we kind of whimper into the I said limper, I meant whimper into the end of the weekend. Yeah, that's what I meant. It's Friday.
I'm limper than you, man.
I'm a limpering too. Yeah.
I think we're still in the phase that risk assets are the ones that are moving the market. So far, what I've seen this week is a consolidation after a rather sharp move lower. I think there are chances that we're going to see at least one more leg down in the days ahead. So I think short term, there is a chance that we're going to see more risk off, which should keep somewhat the dollar supported. And I say somewhat because the dollar response remains unimpressive. But I don't see any real reason why this is going to be more than a short-term situation, not as long as the policies remain the
Canadian
same.
wholesale sales data is good. Retail sales weak.
It's bad, yeah.
Yep, there it goes. Boom. Oh, no one knew that. No one knew that data was going to be bad. Sorry, Steve. Didn't mean to step on you there.
Yeah,
but,
mate. Absolutely. Data always has priority.
Yeah. So now I would be careful with the dollar Canadian. We've been up here. We were up here yesterday, and this is a pretty epic failure yesterday when we were up here at 132.50, and then we rolled right back over. So in order for the dollar Canadian to really, boot scoot and make a move up above 32.50 and 133, we're going to have to see a sell-off in risk assets, as Steve pointed out. And what I'm really looking at with the S&P is a move below 3,300. I think everybody is looking at this. And I'm going to leave you with one last thing before Paulie takes over here. I'm going to leave you with just one last thing. Talking with the guys in my office, and we were talking about what's going to move the market now. Like what's going to really spur the move, or spur a move of the equity markets from current levels. It's obviously not the Fed, because we already know that the Fed's going to stay at zero forever.
A rescue deal.
If we get a fiscal deal and it's 1.5 trillion, is that really enough to satisfy the market? So I would say no, and I think most of us would agree it's not. That's kind of expected, and maybe might even be a disappointment, because we're not going to get $2 or $3 trillion. So even if they manage to get something through, which the risk right now is they don't. So I think that's not bullish. So now what else? Well, we have the election, and so the election is going to be, right now the market believes that a Biden win is bearish for stocks. A Trump win is bullish for stocks. So we're going to have to start watching the polls. Now, I am a believer that it's actually opposite. And so do actually the guys from my office, which means that what we're looking for is, like, let's say Trump actually wins, which I think is going to happen. I think we'll see a spike up in risk assets. Then you sell into that strength, because, he's going to lay into China, and he's going to lay into you guys in Europe really hard in his second term. Really hard.
Why do you think so, Blake? That he's going to?
Oh, he's got nothing to lose. He will be. I'm going to pee on my mark on history, and he is going to trade war the hell out of this world. I'm telling you.
Okay.
And that's my opinion. Flip side to that is, if he loses and Biden wins, everybody thinks that it's going to be bearish equities. I think any dip in equities, you want to be a buyer, because people will turn around and say, you know what, it's going to be
better off.
It's going to be, well, I don't know if it's going to be better off. It'll be what's the old adage they use? No Obama drama, or no Obama, no drama Obama, whatever, however they said it with Obama. Is Biden's going to be a lot of the same. So
the devil,
stability, basically, right?
Yeah, it'll be a little bit more stable, and I think they'll say, okay, well, maybe China-U.S. relations will improve over the next couple of years, and so any real severe dip in equities, we're going to have a taxation issue. I believe that as well, but I think you have to be a buyer of a big dip, or we'd be a seller of a big spike. The reason why I'm saying this is because I think polls are actually going to be moving the markets now. So if you see the polls widen in favor of Trump, the stock market is going to like that from here until the election. And if you see them widen towards Biden, I didn't mean for that to rhyme.
You're a poet and you don't know it.
And so it'll be, Blake, it'll be the opposite of what happened in 2016 when we went limit down after he won, and Carol Icahn
never stopped.
Yeah, well, the problem is we're not going to know the night of. The bottom line is we're not.
It might be 2 months.
Blake,
it could be a month, 2 months. Who knows? I think we all have to watch Florida. Florida is going to be the real battleground. Yeah.
My only objection to what you said is the following. We saw through the Trump presidency of at least the first term, and who knows if we're going to have a second one, we'll see. We saw that the market dismissed any type of political erratic move, because at the end of the day, if one thing was proven, is that the player in the game is the Federal Reserve. So since I see no reason why the Federal Reserve will opt to be more
Go
or
ahead.
less easy on monetary policy, no matter who of the two wins. I think that the fact that Biden wants higher taxes, which higher taxes directly hurt company profitability, might actually be a reason of underperformance.
Well, the Fed's out of bullets. They're not going to tell us they're out of bullets, but they are out of bullets. They're not going to negative interest rates because it'll kill the banking sector. So they're going to stay at zero interest rates forever. We'll stay at ZERP for a long time, but the market already knows that. So I think the Fed's really
left.
What?
They still have one weapon left, which is
what, to throw Powell under the bus.
Which is buying stocks, which theoretically speaking they don't have the mandate to do, but they also didn't have the mandate to buy corporate bonds. What they did and what they can do again is create another special purpose vehicle and bypass that restriction as well.
This is where you start to run into very murky waters with the Fed, where then you start to, when they go outside that mandate, and then
but they are outside the mandate. In all respects,
I know, but that's when it really starts to get it gets a little more public outroar. But anyway, hey, I'm going to stop. We could sit here all day, Steve, and chit chat, but let's not take away from Paul Franco. So,
yep, absolutely,
Paulie, it's yours. Glad you could be here today. Oh, for those, wait. Before I turn it over to Paulie, if you guys haven't registered for the Traders Summit, make sure you do so. It's free. Get your spot. Get your seat. And I'll put the link in the chat box. So then I just had to say that because it is Friday. You guys do it. Do it because we might run out of seats this weekend. And then if you want to listen live, you're just gonna have to listen to the recording. But you still should register because you still will get the recording. But register. Don't wait. Okay. Paul Franco, how's it going, man?
There's another thing they should do as well. Take advantage of our offer.
Yes, that too. Hey, Paulie.
Hey.
Hey.
I'm trying to see if I can switch screens. Bear with me.
Hey, so what Steve said is make sure you take advantage of the seasonal offer. I'll put that in the chat box as well.
And let's see. I think I'm on a different screen. Hold on. See,
I see.
you should be able to see the bias chart on there, and I'm not seeing that.
Yeah, I see it.
You see the bias chart?
Yeah.
Okay, then I guess I'm on the right screen here.
It's in the middle of all the other charts.
Yeah. Okay. Great.
And Paulie, let me just mention that, guys, I do a bias chart here on the Face webinar. Typically, I just didn't do one today, but you guys will get. Paulie does his own, and he's got a few other asset classes on there, and he does that for our subscribers every single day in European trade. So if you want to be part of and listen to Paul, and Paulie's probably one of the best guys I've ever listened to on levels and understanding where key support and resistance levels are. Paulie trades for a living. So and he has since I've met him and before then, obviously, but if you guys want to listen to him live, you have to be a Forex Analytics subscriber. So make sure you take advantage of our seasonal offer, which Steve, how many times have we done the seasonal offer this year?
That's the first.
Once.
The last one was really end of December last year.
No, we did it. We did a COVID.
Yes,
special.
we had a volatility one, but that lasted very few days. That's what I want to say. Yeah,
3 days, and that was just because like we had so many traders that were like quarantined. They're like, "Hey, dude, do you guys have better prices for us being quarantined?" And so we did it for a couple of days. This is the best offer you're going to get for months. So take advantage of it. All right, sorry, Paul. It's all yours.
Okay. Referencing what y'all were saying about the election and also the Fed, we were talking about this in the chat room, and actually when they're doing the presser and all that, and we didn't even come back to the rebound, or at least in the Nasdaq. But I was talking about that, and I was even posting that on the Twitter. Is that kind of reminds me of what Blake used to say about the baby or the still needing more candy. And Blake's right. The Fed's out of bullets, and it's not necessarily me saying it, but Blake saying it. The market was telling you that, because I was mentioned to people even that day that was the first time, and I can't even remember when, that on a FOMC day, we didn't see the market just rallying. All we actually saw the market selling off and bouncing back. And then when they had the presser, we could even bounce back to the early morning rebound area. So yes, the Fed is out of bullets, and the market knows that, and that's why the market went and sold off. And then I think the risk with the election are different risks. I'm not going to get into that, but I think at this point, it behooves most people just to start to get flat or take in and those big profits that they've had all along, and then just see the market fade, not one straight line, but pretty much fade as we go in towards the November elections. And I think it has more to do than with necessarily Biden's this or Trump is that. I think there's some real concerns as to what may happen, and I think that's where the risk is. Not necessarily that it will happen, but I think that that's why you're seeing the equities under pressure. But that being said, I just want to go in and touch on the bias chart. But when we do the bias chart, we do it on the scalp levels. Now you can see on the euro, it's a little bit wider, and like case in point, we had on the dollar CAD. Y'all are looking at the data. Today's bias chart resistance is going to be 32.17. I think on the release of that news, I think it got up to about 30.95 or 30.98. So not looking for too much, but usually we keep the bias chart set up with the scalp levels relatively tight. The reason we have a little bit wider on the euro dollar, and I'm going to go on and pull up the cash dollar index right here, and bear with me if I can close out the Skype here. So we're going to have this here. Let me go and pull this up. One of the things that we were talking about in the pull this up in the chat last week, we actually were talking about it today also to a certain extent. But if you look, one of the things that we had mentioned was when we ran up here back in late March, obviously there was a dollar shortage, the Fed stepped in and so forth, but you've seen the dramatic falls that we've seen here in equities, and I'll yank this up real fast, make it a little bit easier. And here's just obviously here the NASDAQ on a 2-hour chart, S&P with the 2-hour chart, pretty big falls. I mean, if you look at a bigger scheme, but some pretty good volatility. So you think about this, usually, a lot of people, the old trade is, okay, well, if the equities sell off, everybody rushes into dollars, the safety trade. Well, I mean, we did get a little bit exaggerated with the dollar shortage, but I've been beating the drum since late last week or middle of last week with a couple of rants that I'd mentioned, and was to say this: when you look at how far we've fallen here, look at the SPOOs and look at this pretty good doggone good fall here. And when you look at the dollar index, we should be at least at 95.5, knocking on the door here at 96. Maybe on the sell-off we just saw yesterday, day before yesterday, probably should have popped into the 96 something. My point is that it's not a matter of projecting or pulling out fancy technical analysis. Look, if it can't rally after this huge fall, and you're talking, look at this, we got up to 103. We fell over 10 handles. And here is the stock market now falling completely apart here. Not falling, but I'm on a very short-term basis, a very good pullback. And we can't even get to 96, not even 95. I mean, on this sell-off that we had with the Fed, you would have thought they would have at least taken out the 93.89 and jumped into the 94. This dollar is going down like a submarine horn honking. And the thing is that if it can't rally in the best of news, when is it going to rally? And everybody that's been around the block a few times trading knows that when a market won't react or doesn't react to the way it's supposed to react, then you know it's really suspect. And that's my thought is here, is that when we do break, we should go in and break for a good, I think for a good 200 ticks. We take out these lows, and boy, we are going to be in one heck of a dog fight. And I think we'll fly right down here and blow down here to, I don't know, 88, maybe even a little bit lower. And once again, like I said, my thought is, and I've never been so much of a dollar bear ever. But the thing is my goodness, if you can't even rally with S&Ps, equities, Dow futures, NASDAQ completely selling down. I mean, we've had some pretty good roller coaster rides on the way down over the last week and a half. And forget 96, forget 95. We couldn't even take out this high here at 93.89 right there to go in and kick off. So that's why I think it's in a lot of trouble. And to pull up the inverse relationship to that, which is the euro dollar, I myself thought we'd get some kind of a pullback. At the beginning of last week, I was looking, okay, well, we're finally going to get a pullback in the euro. And if you look at this smart rebound that you saw here in the euro. And I have been saying that, look, we get a foothold intraday above 1952. This sucker is gone. And I mean gone like nobody's business. So once again, not a big euro bull, never have been a big euro bull. But once again, like I said, it's just the charts or the market telling you the same way people were saying about the Fed, and Blake was saying the Fed's out of bullets. Look, it's not, you don't have to listen to whoever, just see what the market's telling you. The market's telling you that the Fed is out of bullets because it didn't even react. And when have you not seen the market react? And Powell was certainly dovish. People might mention degrees of dovishness he could have been, but he was dovish, and we couldn't even take out the morning rebound highs. So this market, like I said, the equities, they know the Fed's out of bullets. The markets are going to go and start to pare back some. But if you look in here, the dollar's not even responding. The dollar doesn't even care that equity sell off. So there's no run into the safety of the dollar. So once again, if anyone that's short, they're going to have their stops above here. We get above 1952. This sucker is gone, and I mean gone. So just wanted to go on and preface what my thoughts were on that. Not trying to be a prognosticator, but I think that the market in and of itself is telling you a whole lot more than anybody else, any talking heads or any analyst or whatever. So on the just to go and touch base again real quick on the European crossover webinar, we do a daily bias chart, and we go on and pretty much generally the levels are going to be a lot tighter because we're just looking at scalp levels. Like I said, today our bias chart resistance for the dollar CAD's at 32.17. High so far has been, I think it's like 30.94, or I mean 30.98 or something like that. 31.98. But we do go on and cover all these, including the cross rates, and everything's pretty much set up for the for on scalp levels. One pair that I did want to go and talk about also, which we've seen a lot of movement here, and that's going to be on the cable. And those of you who follow Amanda, she's in the chat room all the time. She trades this pair and really the sterling pairs very well. The reason I do go on and bring it up is it's almost the same thing as the euro. Look at this nice smart rebound. I want to pull up some other ones just to see that, to give you an idea is that this dollar's in trouble. If we go on and pull up here on the Kiwi, look at this sucker. This thing's just looking like it just wants to go on and take off. If we're looking for resistance, now we have to go on and go into the weekly chart. That's how much that this thing is continuing to push. And we would have thought, okay, well, we're finally going to see this thing start to taper off. Because look at this rally. Remember when back in March, the dollar shortage, we had the Australian dollar, in the 50s, the Kiwi, and look at these rebounds, and they're simply not letting go of it. And this thing is open to even continue to push higher. At this point now, we're even looking at a weekly chart. So once again, it goes back to what I'm referencing is that these pairs are in trouble. I'm talking about the dollar index in and of itself. Taking a quick look at the gold market, and once again, I'm just trying to provide just an overall outlook of what we're looking at. The dollar did go on and do a little bit of a rally. Looked a little bit in trouble, but once again, I think the reason the dollar's holding up because some people were starting to say, oh, we're going to see a sell-off in the dollar. I mean, in the gold market. I think what brought the gold market back right now is once again the weakness that you're seeing in the dollar. Now, looking at the equities, we've already had a pretty good sell-off here in equities. The one thing I will go on and note here, if you look, let's go on and open this up a bit. You can see here that line that we're looking at, that is the VWAP, volume weighted average price, from the lows in June here. So you can see right here, thrice we've seen it support the NASDAQ. You see how it's bounced off. I use the VWAP, same day VWAP and 2-day VWAP, but you can see how well it's caught this market. Actually, like I said, when I rolled over to the December, it didn't load all these days back. So honestly, until this morning, I didn't even know that one of the gentlemen in the European crossover webinar was asking me to take a look at some levels for the Dow futures. And then when I pulled up the S&P, it had loaded those days back, and I saw the S&P, and I was pretty much a little bit upset to know that I'd missed this because the days hadn't loaded as far as back, and so wasn't showing me that. But you can see how well the VWAP had held. When we look at the S&P, we'll take a look. Now here's where maybe we're going to go in and see some type of movement here. And let me see.
Hey, Paulie, just a question out of curiosity. Why did you anchor the VWAP at the June low instead of the March low?
Well, I do have one at the March low, and
Okay.
bear with me. I think we got stuck here. Hold on. Yeah, doggone it did. Hold on.
There's gremlins today.
Yeah, no joke. Hold on. Let me take a look and see if it. Bear with me. I do. You'll see it more on the S&P, but hold on.
Okay, I believe you.
I do go in and do both of them. Let's see. Blake had some problems with his computer with the mic. Same thing before I came on to the doggone, it's not pulled out. I accidentally hit the close button to shut off button on the computer, and I think it messed me up too. His was because he accidentally disconnected the mic. I went to go in and connect my mic and actually hit the shutdown button, and before it does the shutdown, I was able to go in and restart it, but I think it did mess me up here on the charts. Let me see if I can get the S&P. Now the S&P, the VWAP from June, apologies here, hold on one moment. No, it doesn't want to go and pop up. Let me see if I can load it up from here. No, it looks like it froze on me. The VWAP from June in the S&P, and I'll just pull it up in the TOS charts. This is frustrating, but like I said, self-imposed, because like I said, what happened to Blake essentially happened to me, I guess, at the same time. He was accidentally disconnected my mic, and I accidentally, when I tried to connect my mic, I actually hit the reset button, and everything started to close down. I stopped it, but I think I caused myself some problems. So let's go into the S&P real quick here. Maybe if I start to shut some things down. Try and shut some things down, and maybe it'll help relieve it. But I think that's what had happened. Hold on. The VWAP, which I don't have on here, but the VWAP on the S&Ps, I have this on a weekly. Bear with me. Everything's running slow because I did shut that thing down. I think that's what happened. It's coming in today at 3250. So the VWAP off of the March lows, which is actually more dramatic in the S&P than it was in the NASDAQ. So you can see here, we'll pull this back right here. Off these June 15th lows, and that's not too bad there because the high, we rallied up to 32.27 and we fell back to 29.23. So when you're asking me, why do you not, I do have the VWAP on the from the March lows, and I have the VWAP from the June lows. And as you can see, when I showed you earlier on the NASDAQ, we'll pull this up here, see if I can, I think it's all frozen, as I said. It had 3 times on this move down, it's held at the VWAP from the June lows. I'm over here trying to play around with the charts, so I'm still trying to see what can happen. But anyway, you can see that when we came up here, we rallied up, and these were all-time highs at the time. In the S&Ps, we got up to about, as I said, about 32.27 or so. We fell back in pretty decent fall, fell back to 29.24. So you're talking about basically 300 handles, not nothing to sneeze at. So when we do the VWAP off of that, it comes in at 32.50 right here. So one of the things I am concerned with, and I did mention on the webinar today, is if we do go in and see, and as I said, everything's running a little bit slow because of the screw up I did on the computer this morning or before the face webinar. But one of the things that I am going and concerned is we're not that far away from last week's lows. So today we do have options expiration. I would think that late in the afternoon, if we start to see these markets rotate down again, and if we do take out last week's lows, you have to go with it, because there's going to be some people, some systems that from a medium term perspective are going to either add on to shorts or increase shorts. And so if we do start to break, and that would come in, last week's lows appears to be the close, not the lows, but the close from yesterday. Last week was 32, 33 and a quarter. We start to break beyond that, you're going to see some additional selling. And so what you'd be looking at, the VWAP from the June lows comes in at exactly 32.50. That will give a target for them to go in and push towards. So once again, I was trying to pull it up on my Ninja, but like I said, I think I screwed everything up with the computer when I accidentally went and shut that down. Let me go in and get off of this now. And everything's running a little bit slower. The only thing is the NASDAQ is, I will say, is a little bit better positioned than the SPOOs. So we'll see how this plays out. One of the things I do is during the day in the chat room, I'm sharing, I'll follow closely, which I'll call the Big 8 plus Tesla. And once again, I want to be jumping around because the computer's running slow now, but I'll usually go on and pull up these charts, have them running up on a 30-minute as well as a 5-minute, and just use my 2-hour levels here. You can see here that Apple is still above the trend line for now. And one of the things we've been looking at is 109, the 109 area, which it did bounce from yesterday morning, and then to fill the gap, we had it at 112.05. We filled the gap, and right then I went short on the NASDAQ, and I posted that in the room that, hey, look, we're filling the gap, and we'd come to a key level, which once again, I think it was actually 11,143, and that's where I got short. I think we got to 11,149, and then we fell off. I got out of that really way too early, because we saw the market eventually come down much lower. But one of the things I do to help me is I'll just have the Big 8 up here, and then I'll go in and drop them down to 30 minutes. Sometimes I will go and drop them down to a 5-minute, looking at volume. But we go in and share all that information in the chat room. And one of the things I've mentioned, I shared on Twitter, is that we've got a lot of great traders in the chat room. Some that trade, a lot of them obviously that trade Forex. Amanda's just a wizard when it comes to trading the sterling pairs. We have some traders that will trade crude oil, that share their information in the chat room. Like I said, everybody has different time levels. Some trade from a little bit longer time. Most of them are day trading. For me, I'm primarily just scalping. But once again, getting back to today, I think we're in a better position. If you look at NVIDIA, it's even had a pretty good pullback. But once again, we're still above the trend line. One that looks like, and I'm just going to move these charts over because I don't even want to even switch screens anymore because my system's running slow because of my self-imposed technical snafu. You can see that Facebook did go in and break this trend line. We can open this up. Let's see if I don't have any more problems. Everything's running a little bit slow now. But you can see here, and that now we're below this trend line. So it's the one that looks, obviously, of the Big 8, really does look like to be in a little bit of, if you want to call it, a little bit of trouble here. Let's go pull this back. And purposely, I have the dailies up right now. And obviously, I was looking at the FX pairs at the time. You can see in Netflix, same thing. We'd seen a pretty good bounce back. But one of the things that you are seeing here is that before, remember, these markets were going bananas and people just buy. Now people are no longer getting rewarded for buying. And now we're starting to, on some of these, including Netflix, you're seeing these markets now start to, from a technical perspective, we are starting to break down. Most of the other big eight are holding up relatively well, but you are seeing some of those that are in trouble. I remember when Netflix had broken down as we sold off, and I thought, oh, they're not going to come back. Man, doggone if they didn't pop all the way back again and then pop up even higher. But now these markets are starting, you can see, we're starting to see lower lows and lower lows. And anybody that is going to be long for many of these areas is really, even from a technical standpoint, is going to use any rallies to go on and get the heck out of Dodge or get out of their position. So I don't really see these markets rallying at this point. We may see a little bit further rally today. I don't think we're going to see much of it. I think in the S&Ps, I think we were talking to another guy in the chat room. I said, maybe we'll see like 33.75. But once again, I'm not looking for a whole lot because at this point now, the market does realize that the Fed is out of bullets. And so and I remember sharing that on Twitter. I was saying, it reminded me what Blake would say, but he was talking about the candy. But to me, I was like, the junkie needs more. A junkie always needs more. They get enough, and then they need more, and they need more. And the Fed was, as reasonably dovish as it could have been. But the thing was, there wasn't anything new that they could announce. So henceforth, that's when we started to sell off, and we took another double dip sell off. The only thing that is going to make a difference is if we start to go towards those lows from last week, and that's possible. The S&P's in a lot more of a dire shape that it can go after those closing low from last week, and may be able to get some extra oomph on the downside. But if you look at the big eight here, you can see Microsoft, Apple's still holding up well. We'll pull up the daily on Microsoft. I have the 2-hour chart. Let's pull up the daily here. Now that is now below the trend line, but I think that trend line was fairly steep. We'll pull it up. But you can see things are still, you can see just like we saw in Netflix and to a certain extent Facebook, you can see how this market, now we're starting to break lower. We're just starting to lose this. The one market, the one stock that does seem to hold up and actually give the market a little bit of juice is NVIDIA here. I remember when that thing was, it would just go for, it almost seems like it would rally for almost no reason at all. But you can see we're still holding up right now. 478 is going to go on and be key. But right now we did bounce off of these lows yesterday. And remember when I showed you that before my system now starting to go kaput by me messing things up, you saw where that 3 times the NQ tagged or just missed it, which was the VWAP from those June lows, and it's doing okay right now. It's holding up reasonably okay. Actually, I'll try and pull up this 30-minute chart here. Hopefully we don't lock up again. I was on that 2-hour chart, but it finally has locked up. But you can see we've come off of these lows, but over the course of like I said, in the 2 hours, on the 2-hour chart, going back here, these 3 areas here, we did hold that VWAP from June. So the NASDAQ is in a better position than the S&Ps. The S&Ps, once again, I think we might make it up to 33.75 maybe. But like I said, it won't take a whole lot for this thing to slide down. And if we do go towards the closing low of last week, then we could propel some additional selling. And if we do, you got to be targeting 32.50. 32.50 will be the VWAP from the June low. And if we pull this further back down here, once again, it's a 30-minute chart. So I don't have as many days loaded back. But there is some support there at that 32.50, and that would confluence with that VWAP. But if you look at the S&Ps, to me, it's in a far weaker position than the NASDAQ, which once again, it's already hit the VWAP. So if you're looking for areas that we'd go to potentially, we might push up a little bit higher in here. But once again, I think that the key is that at this point, I think that the market does realize that the Fed is pretty much out of bullets. It's the market, the price action is telling you. And I think at this point, we have a lot of people that came in that kept on believing in that buy, even if we dipped. And you can't blame because it was the, BTFD. And with the Fed, you got the Fed at your back. But 2 days ago, we finally saw where the Fed's still at your back, but the market doesn't care anymore. It's no longer listening. It's just like basically it's almost like the emperor has no clothes, and the market's realizing it. And 2 days ago is when people actually saw it in the sense that, wow, it didn't rally. And one of the things I pointed out that morning was, wow, this is the first FOMC day since all this business that I don't see the market rallying. So I think that that's where we're at right now. Actually, I've already gone over the time, but I'll go on and let you take over, Dale. But anyway, just want to just share some general thoughts on what FX what we're looking at, as well as in the indices.
Love your charts. Love your charts, Paulie.
Okay.
Great
and,
analysis. I think, if I could wake up earlier, I'd watch you. I do watch your recaps. So, it's not as valuable if you're watching Paulie's recaps that come out, hours or later. A lot of the stuff he's talked about has already been actionable. So, just Paulie's a good reason to join. I think Paulie will guide you to, pick up 9 pips to pay for your subscription every 10 minutes. Anyway, so I don't know if Steve wants to come back on or Stelios. I don't have a guest today. So I guess you're going to have to close it down, Paulie.
okay.
But before we go, do you know the tagline that we use here?
No.
Okay. Don't just count your pips, count your
Oh,
blessings.
count your blessings. Yeah.
Yeah. So and anyone, all my Trading Warrior brothers and sisters that are celebrating Rosh Hashanah, I want to wish you all a happy New Year. Hope it's one of your best years ever in all ways. Have a great weekend, everyone. And we laid it all out on the court for you this week. And after a couple of days of recharging our batteries, mine has a crank like the Model T. So I'll be cranking my battery up to get recharged. We have a big week next week. And then don't forget that our summit starts at the end of next week. And also take advantage of the price action. It's a nice dip to buy subscription. This is the pullback you've been waiting for. So that's a wrap. And thank you, Paulie, for coming in today. I think you should come in once a week. And, people need to know about you because you're a great asset to the company.
Well, thanks, Dale, and you have a good weekend.
All right. So that's it. You'll close it, right, Paulie?
Yes, sir.
All right. So everyone have a great weekend. We'll see you on Monday. Good day to join. Gives you all weekend to learn how to navigate our website. And that's a wrap. Thank you,
Dale?
Paulie.
Dale?
Yeah.
I think you're going to have to close it because it's not letting me close it. It's just letting me leave.
Okay. Let's see if I can. I got it. All right. See you, Monica, Kevin, Amira, Skip, Ite, Sam, Brock, Monica, Sinatra. See everyone on Monday. Enjoy.